Good evening traders, it's Simon at Cars Capital Markets. Today's video is about a bear trap and why I didn't take a certain trade. A friend of mine said to me last night, can you look at this trade, what do I think of it? And I wasn't particularly happy with it. I said I don't think it's the greatest in the world, and I shall explain why. But before I do that, I can tell you right now a lot of retail traders have lost a fair bit of money today on this one single trade. So firstly, let's get the hindsight behind it. I believe natural gas, this is the monthly chart, will head up higher. So, to start with, on the monthly chart, we are making lower lows at the moment, but also we've got higher lows on the MACD. RSI keeps scraping zero, then popping back up again. And I do believe we're forming a falling wedge, which is a bullish price action trade. Now, if you put the wedge from this top here to this top here, it's still going to be a wedge of some sort. So at the moment, it's still looking to be a falling wedge, which is still a bullish action. The weekly has started to create a small bull trend now. So here's your first high there. This is your first lower high, a higher low. Sorry. This makes the higher high, and this makes your higher low here. So we are in a trend here, a bullish trend. It also has made what you could say is a head and shoulder pattern, or forming one. So here's the left shoulder here, here's the head, and here's the right shoulder here. So what the person said was, on this weekly candle here, it's ended, we may pop back down a little bit. There's a small short-term trade. And if you look to the daily, we've got the key level 3.15. If you go back to the video just a minute ago, you'll see 3.15 on the weekly. It's quite a monthly, so it's quite key. And so yeah, a lot of deceleration, reversal candles. I said, yeah, I can sit, maybe just retrace back down a little bit round towards the daily 50, the pop up higher. I understand that, no problem at all. You could even put this, your Fibonacci retracement in, and you could have a reason to say come down to 2.95. You could easily, no problem at all, or just level 3.00. Anything around that area you could say was good. So as a short-term trade, short it was. Now, what put me off was the 4 hour. So, as you can see, this 4 hour 50 has been respected nicely since the beginning of February. 10th of February has been respected nicely and has been creating a trend beautifully. So, when after last night we came down to then just to test the 4 hour 50, there's no way I'm going to take a short term trade through such strong support there. And the reason why is because it's trending, simple as that. I looked at it here once here. This was back in the middle of March. It looked interesting, but I need to wait the confirmation, and it carried on trending upwards. That's the way it works, simple as that. So if you look at the 1 hour chart, how I'd normally trade, a break and retest of the 1 hour 50 is what I'm normally looking for. But as you can see though, the 1 hour 50 has never been respected. This blue line represents the 4 hour 50, and that has been respected. So no, I'm not going to trade into it. And this is why sometimes when you take trades, you put the trades together, what do I think? I think the market needs a pullback, that's fair enough. But at the moment, the 4 hour 50 is causing you so much support and resistance on the 4 hour 50. I'd rather have a break and retest of the 4 hour 50 to take the trade in either direction once you know what's going to happen next, or if you feel it's going to happen next. So the moral of the story of this on this trade here is to actually multi-time frame analysis, put the trades together. So you've got a lot of decel, key level, and reversal candles on the daily, but the 4 hour is still trending upwards and still respecting the 4 hour 50. So, and then you go, well, where do I want to trade into that and take the risk? No, I don't. It's simple as that. And that should work with any of your trades on any time frame. Put the time frames together, whether you use 1 minute, the 5 minutes, the 15 minutes, the 30 minutes, well, it doesn't matter what it is, just put them all together and see what comes up. As simple as that. And if they're all saying the same, or majority of them saying the same, then they're fine, fair enough. If the higher time frames are saying one thing, but lower time frames need a pullback, and you could get a little quick 1 or 2% trade there, fine, fair enough, do it, it's not a problem. But just make sure that what you're trading, the reason why you're trading, makes the trade valid in the first place. And that's what we looked at, and this is why also it wasn't on my daily direction prediction for today, because of the 4 hour 50. So I only take few trades each week, each month. I take very few trades, but when we do, we try and get the best setups all together, simple as that. And obviously Euro CAD did move up higher today. It didn't tag us in, never pulled back, but at least you get a good feeling of the marketplace. Hope you guys are doing well, and I will speak to you soon. Take care.